Hello and welcome to the Gold, Goats, and Guns podcast for Tuesday, February 18th, 2025. My name is Tom Luongo, and we have a lot to talk about, and we do have a lot to talk about with the two chatterboxes I've got on the board today. We're doing round two with myself, Eric Yeung, and Vince Lanci. This should be a good one, folks. I've been looking forward to this one for a while because with everything happening with the LBMA, the Bank of England, the sovereign wealth, we have so much stuff to cover that I had the only two guys I could think of that would help fill in what I think I know about this stuff are these two guys. So Eric, Vince, thank you so much for doing this. It's a great Tuesday morning in Trump's new America. How are y'all?
I'm doing good, Tom. Thank you for having me on.
Yeah, I'm good, Tom. Yeah.
So guys, let's start with the 800-pound gorilla in the room, and which is the draining of the LBMA. I mean,
Right.
we've all been waiting for this moment as physical gold guys for a long, long time. We've all told various versions of the story, either on our Twitter feeds or our blogs or our Substacks or podcasts or whatnot over the last 20 years. I think we finally reached that moment that, FOFOA was talking about 25 years ago, and about how there's going to be a bank run effectively on the entire paper gold market and run through City of London. We're in the middle of it now, and I think it's important that we really wrap our heads around it and why it's one, so important, and two, why it's a harbinger of all the other things that are about to come. So I know, Eric, this has been your thing for the last couple of weeks. I absolutely want to hear you talk about this. So what do you really think is going on here? And I know you and I agree about this. Who do you think is winning?
Okay, so I think the US is winning. So to answer your question first, right? But to kind of go through this, what happened is that the LBMA used to have T+2 for the physical gold delivery. And all of a sudden, I guess almost a month ago, it became T+60. And some experts like Andrew Maguire is saying that insiders are telling them it's actually T+90. So Andrew actually said that gold at the LBMA is not small, it's not spot price anymore, because those are now all forward contracts, right? Like, you're not getting your gold until 60 or 90 days after you request delivery. And what else do we know? We know that there's a huge gold buyer at the COMEX taking huge volumes of physical gold delivery. And according to Rob Keynes, in the month of December and January, the physical gold delivery at the COMEX is 498 metric tons. And right now, I believe, just numbers from last week, there's around 200 metric tons of physical gold standing for delivery at the COMEX for February. So combine that, that's almost 700 metric tons within 3 months, right? So who can that big gold buyer be? This big gold buyer is turning the COMEX and the LBMA upside down. So my theory is that I look at this and I say, can it be the Chinese, the Indians, a bunch of guys like me in Utah, right? Hedge funds, whatever, standing for delivery? Is it possible? Well, the Chinese and the Indians, they have been buying gold from the COMEX and the LBMA before this happened, right?
To throw it out there, since October of 23, that's when
23, yeah.
Saw it.
Okay, that when we first saw that.
Before that, but that's when it became significant. That's where the premium exploded. Anyway, I just want to let people see that.
Okay. But this time, since December, the delivery volume exploded by 15 times, okay? 15 times of what Vince is talking about when it was just Indians, Chinese, hedge funds, whatever, right? Sovereign wealth funds. Who can it be? Those people are still there taking delivery, I'm sure, right? But
right.
How about the 14 times? How about the extra 14x? Who is that? If it's anybody, this is my theory. If it's anybody other than the U.S. government or the Fed or the proxies, this would have been shut down so fast, your head will spin. Okay, like
Like the
just
drones,
force you
like
to,
the drones in New Jersey, right?
yeah, like that,
They
like
let
that.
that
They'll
go
do,
around for a long time.
yeah,
Same idea.
yeah,
Same idea.
yeah. They'll just shut you down, like what they did to the Hunt brothers, right? It's different situations, similar. You know what I mean, right? They'll just shut you down. So my theory is that the only possible explanation that is that this is the U.S. government or the Fed doing this, and I have to give I have to give credit to Tom right in this juncture because Tom, like, he's the first
Great,
person, okay,
great.
who told me, like, for years that J.P. Morgan and the Fed are working together, and the Patriots are working together against the City of London, and I doubted it, yes, because I didn't see the evidence. Okay, I mean, like, I needed hard evidence, and now I have the evidence to believe you, Tom. It's happening.
Thank you.
Okay. And guess what? Who's the bullion bank that is taking like all this physical gold delivery at the LBMA and shipping it to the US? This JP Morgan is one of the biggest guys right now doing that.
Of course they are.
And guess what?
They're also the ones not deciding on the market direction. They have no reports coming out.
Exactly. And I got guys following me. They are in the banking business and they know the bullion bank guys. It's like next door, basically. Next, cubicle, whatever, right? And they're telling me that most of the North American bullion banks are net long, okay, physical gold and silver right now. So you look at the COT numbers. Don't take that number as because there are many bullion banks at the LBMA. It's not only one or two, right? There are European bullion banks. They are ones that are based in UK, right? They are North American bullion banks. So again, I have to give credit to Tom. It's one group of bullion banks versus another group.
Right.
Okay. So like, I mean, they could have, and then another thing, right? The Americans, they could have done this through the LBMA. What I mean is they could have stood for physical gold delivery at the LBMA, not through the COMEX. Why did they do this through the COMEX? Ronan Manny posted something a day ago, and he said this is almost like public humiliation or execution, whatever you call it. Like they're dragging the LBMA out in the public. I mean, if you know what you're looking for, that's what it is, right?
Right.
It's
Yeah, no,
almost like Scott Bessent and Donald Trump is giving us the evidence, the necessary evidence to put it all together and figure it out.
I know, Eric, that those points are really well taken. And I'm going to go and I want to remind everybody that Vince and I were on this story, a year and a half ago, or almost 2 years ago, October 23, when we did the podcast. We talked about.
That was when I made the comment. I was like, "Oh shit! I just found out this." I saw it.
About, and when we're talking about now, and it's episode 154 of the podcast. Vince Lanci and Gold is the New Black is the name of the episode, where we talk about what happened. JP Morgan becomes the only trusted intermediary for GLD, and we theorized back then that, and this is mostly Vince's arguments. I'm going to give now. We're going to do the Mutual Appreciation Society thing and say this is Vince's insight, where he said, "This is What are we doing? We're setting up soft capital controls around physical gold by we're going to depreciate the COMEX." At the time, we said we're going to depreciate the COMEX, and we're going to move speculation of and forex speculation, dollar FX hedging. We're going to move that onto GLD, into the options and futures market on the GLD, and off of the COMEX, and make the COMEX into a physical delivery market, and then eventually get rid of it. And then, but in order to do that, we also have to then set up a soft capital controls around gold, in effect, by gatekeeping and taking that function away. And what we didn't actually talk about at that point was take that function away from the LBMA, who had the ability at the margin to price fix gold through the infinite rehypothecation of gold contracts. Now, I'm going to bring something else in as to why this is a big deal right now. And the other side of this is I'm going to pass it over to Vince to talk about the U.S. is now going to implement Basel III in July of this year. Now, when Basel III first became an issue for the City of London was back in 2021. Alistair McLeod wrote about it. I wrote about it. We all explained that the unallocated pool gold futures contracts would no longer be allowed to be used as calculating bank reserves. and that they would have to go to a only physical gold with a 15% haircut. So now talk about that and how that fits into all of this.
Oh,
Vince.
yeah, I mean that's a lot. I mean, there's a lot there. But first of all, I do want to. I'm going to address what you just asked first, and then I want to throw in some color onto what Eric said. But I probably say it wrong. Basel. I don't know how to say it, but let's just say the Basel III has come out in waves. Now, the first one, believe it or not, I'm not going to bore you with it. They launched the project in 2009 because they knew something was up. And then they scheduled it to be, this is Europe, we're not talking about the US implementation. They scheduled it to be implemented in 2011. And what happened in 2011? Euro crisis, Brexit. They tabled it for 2013. They tabled it again. I don't know. They tabled it forever. Probably Ukraine got in the way. And then they passed it. And then, now this is like Eric is now in this with me. In 2020, 2021 or 2022, I had noticed that there was a change in the law, in the ruling on the US balance sheets of banks. They had, this is all like Colombo stuff, right? So I'm seeing that JP Morgan and Citibank have all of their gold derivatives in the FX bucket. So you don't see it. It's like, fleas on a fucking elephant compared to FX stuff. But then for some reason, right, they pull it off and it has to be seen. And apparently it's 90% of the derivatives book in the COMEX in gold was on JP Morgan and Citibank's balance sheet. So now fast forward from there. Again, I'm sorry.
No, you go ahead. Keep going.
So I thought you wanted to add something. So fast forward from there, they asked for an extension. And then this is kind of when Eric and I first met. It might have been right before that or right after that. But Basel III is supposed to be implemented for the bullion banks in Europe. They got an extension, right? So everyone's supposed to be implemented in, I don't know, 2022, 2023. You can correct me on the date, right? But ends up happening is they get extra time given to them. Again, I'm sorry.
Okay, what I was going to say is when this thing blew up in the middle of 2021, Europe was demanding that London implement this by January 2022, and everybody freaked out.
Right. That was it.
And London said no.
Right.
And the U.S. of course went along with it because the U.S. was under the Biden junta at that point.
Right. And that's where Eric and I actually probably met through an introduction through you. And Eric's like, "Hey, did you know that? Remind me. Did you know that they got an additional 6 months added to their delay? It was a Friday night bailout, basically. Is that right, Eric?"
Yeah, that's what it was.
Yeah, that's what it was. Yeah. And that's how we met. So now staying with the Basel timeline, right? So here we are, 2024, and I'm like, yeah, they're going to be implementing that in the U.S. sometime soon, and I'm not thinking about it. And Eric goes, dude, they're going to be implementing that in July 1st of 2025. And I go, oh shit, that. And so here we are back at square one, where the U.S. banks have to comply with Basel III, which is not a negative, really. It's like, oh, gold's a tier one capital. Now I can use it on my balance sheet and go to the Fed window for cash with it. We have to comply. My derivatives are now shown. Everyone sees it. My skeletons are taken out of my closet. Let's bring the gold back from London, not even getting into the fact that the U.S. is buying yet. So now I'm looking at it like rotating closets of skeletons or rotating moths eating fucking IOUs. And so now we come back to Eric's point that it's like the U.S., whether it's intentional or not, I'm going to be less controversial, but I'm not saying you're wrong. The U.S. looks at England and goes, you know what? Fuck you guys. We've carried you long enough. We've carried you as a bullion center. We've carried you as a continent. I mean, I'm just, I'm vibing off of what Tom is saying. But whatever the reason, it's like this. It's like, all right, we've all gotten our houses in order, and now the last house to get in order is London. And, whoever in London is not fucking paying attention is going to get caught with their pants down, because now the U.S. is repatriating the gold that it has there. And to Eric's point, JP Morgan is the sole proprietor, is the arm. JP Morgan is the arm of the U.S. government when they have to get shit done. Oh, banks are going under? JP Morgan will buy you out. So they fund JP. It's fascism, in that sense. Yeah. Anyway, but that's
Okay.
that's the Basel III thing. Yeah, I'm sorry.
So I was just gonna say, sorry, I was just
Go
gonna
ahead.
say, I know why the US is repatriating all this gold. Like, and they got a very tight time frame. Why that is because like they're gonna audit US gold, and then they're going to utilize that gold. Okay.
Mhm.
Like based like in multiple ways, right? Like Vince talked about the sovereign wealth fund off rec, before we go on this conference, and then Judy Shelton has been talking about the physical gold bond, right? Which, by the way, Scott Bessent talked about it. Okay,
Mhm.
so it's a legitimate potential vehicle that they're going to implement in
Right.
2026. And before they do that, they have to audit the gold, right?
You
So
have
they are in a tight time schedule, okay? That to get all the gold back into the US in US jurisdiction so that they can audit it, so that they can do all the stuff we're talking about in
feel like
2026.
I almost
Yes.
feel like, not even getting into the China-U.S. Relationship, which I think is better than people think. I almost feel like the U.S. Okay, everybody get your house in order, and then a switch got hit, and that switch was Trump getting in office, and it's like, okay, our turn, right? China bought gold. London had time to get gold, but they didn't. China. To your point, Eric, China was draining the U.S. for over a year and a half, or probably 3 years. And the reason we didn't stop China from draining the U.S. Is because if we stop them from draining the U.S., something that Tom and I talked about, if you sever deliverability from a legitimate counterparty, what you do is you destroy your ability to price the commodity. And if you destroy the ability to price the commodity, you can't stand up for it. Pricing goes to China, pricing leaves the U.S., and the dollar
Yeah.
gets cooked by it, right? So we had to show that we were man enough to handle the situation. So what did we do? Now this goes back to your comment about JP Morgan. For the last 3 years, everyone's really, oh, the COMEX is going to zero. The COMEX is going to zero. No one's looking at the LBMA, right? So
Mhm.
the COMEX is going to zero, but it probably would have gone to zero faster, hypothetically, had the U.S. not been getting gold brought in from fucking London. So the straw was leaving the COMEX, going to China. Let's say it's going through the West Coast, right? And then the other straw is coming from the London to the U.S., smaller, right? And then you've got China fucking. Everyone's attacking London.
Mhm.
But for some reason, yeah, I love to attack London geopolitically. I understand. I'm with you on that, Tom. But in this instance, it really plays into, sorry, it plays into mercantilism.
Yeah.
Globalism is all about a centralized place to do business.
You know who has
No.
the highest gold price right now? COMEX. And the second highest gold price is at the Shanghai Gold Exchange. They're number
Right.
two. And then the LBM, and then the LBMA. Okay, the LBMA is the cheapest price because it's not spot price. It's forward contract. You might not even get your gold. Okay,
Right.
if you're able to get the gold like immediately or like very quickly, and then you're willing to pay a premium, that's the real price.
Right.
COMEX is like has the highest price right now.
Eric, thank you for that.
Yeah,
There's two things I
yeah,
want to bring up here. One, Bob Coleman's thread from yesterday about the Swiss refiners now charging a premium to even smelt the gold, melt it down into London good delivery bars. Now those are going off at a premium, so that's only going to make the things even worse. But
Right.
the big one here is that we've all been theorizing for years that about how the COMEX would go broke, how the paper gold market would collapse, and everybody expected it was going to be the U.S. because we were the ones defending the dollar with a low price of gold and blah 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 blah.
Right.
This turns out, folks, to have been nothing but yet another fucking British psy-op. When the reality is that they're doing exactly what they project onto us that which they're actually vulnerable about, and no
Right.
one ever expected. And this is the part that everybody right now, because Eric and I were talking before we hit record, before you showed up, Vince, about how everybody can't wrap their heads around what's going on. why the U.S. is winning. No one ever expected that it would be the U.S. that would drain everybody else of the gold.
Right.
Everybody was expecting the United States to commit harikiri and ritualistic suicide over trying to defend the dollar. And we're like,
right.
No,
Yeah.
it's the other way around, folks. And we're doing it right in front of your face. As to Eric's point, we could have done this silently. We've chosen to do it publicly. And that's unbelievably, that's hilarious when you stop to think about it. And that reframing is got everybody flat footed. And I think Brent Johnson had the best. And I know he's your nemesis, Eric, but I think Brent's not wrong when he says, no, seriously, when Brent says, because I was echoing this a little bit as well. I'm like, when they go to audit Fort Knox and they find out that there's more gold there than everybody thought,
right.
Everybody's going to lose their minds, and all of a sudden, all the markets are completely mispriced. Like everything is mispriced because so much of the way the market has been priced at the credit spread levels, at the foreign exchange levels, at every freaking level is in service of this bullshit British psy-op where everything is fucking forex that they control. Control the fucking margin.
You. That's him channeling you, okay? That's not him.
Yeah, I know.
Okay, I know that you've influenced him in this way, and the first person who actually said more as opposed to less, and I thought he was joking, but he wasn't. I have a business relation with him. Is Josh Fair at Scottsdale Mint, who's now exploded on Twitter, and I used the word repatriation with him in a conversation, I used the word repatriation probably before most Americans, all Americans, let's say. But people like Eric were like, yeah, we're calling our gold back. You're calling your gold back. It's repatriation. But Americans were just afraid to use that. But Josh was like, we're not just repatriating what's ours. That's why the EFP was moving, as Bob alluded to. We're buying more. And I'm like, well, is that because this is me going, is that because we don't have any? Doing my whole COMEX thing. And he's like, no, we're just getting more to do something with it. I don't know why, but we're getting more. And we had back and forth on that. But anyway, it's hard for me to know what's propaganda and what's legitimate analysis of Brent. But in this point, I would say that, that by the time it's over, there probably will be more gold in the U.S. Than or in Fort Knox or what have you. Than stated.
What I said, it's so funny. What I said on Twitter to that point was, I said, because all the Bitcoiners were like, yeah, there's no gold in Fort Knox, and it's all gonna be great for Bitcoin. I'm like, wait for the wailing and gnashing and coping of the cope from the Bitcoiners is gonna be a massive when we find out all the gold's there, and then you're gonna be like, I don't know, activate next clone, dude. Fuck off.
You know what, guys? Let me give you some numbers, okay? You laugh your ass off. This is from the LBMA website. At the end of January 2025, the amount of gold held in London vaults was 8,535 metric tons. Guess what, guys? You're right, Tom. They're projecting because they have zero. They have no gold. Okay, it's T plus 60. All right. It means they have no deliverable.
There is no spot market. There is no spot market in London. That's your point. There's only
and the London vaults. Okay, fine. They might have 8,000, right? But is it theirs? Is it theirs to deliver, or is it gold that is being custodian by the Bank of England?
Right.
You see what I'm saying, right? Okay,
that's all we're talking about a constellation of events that add up to one thing, connecting the dots. You're right. Yeah. The LBMA put out a webinar and I listened to, and a couple other people did, and PM Bug alerted me to it, and he's a good guy. We're mutuals, and he's a subscriber as well. But you see it in the press, right? They're like, in the same article put out by Bloomberg, they say two things. One, it's completely logistics. It's heavy, we have to move it. And then a paragraph later, the same person says, well, we have to borrow some. Like, what the fuck do you have to borrow if you have it? Which brings us back to JP Morgan in the US. It's almost like, not almost, it probably is like, I've seen this before. JP Morgan is a broker for the US, and London is London. And this feeds into Tom's stuff, and that is there is still a free market out there. And the free market is, okay, in 5 years, we're going to have this event, whatever this fucking event is, right? But in the meantime, you've got a year to get your shit in order. You've got a year. And you're like, okay, is everybody done? All right. And, Great Britain and Europe are like, well, they'll give us 6 more months. They'll bail us out. JP Morgan towed the line. Everyone's towing the line. And now the US says, we know to JP Morgan, we know that your gold was double dipped and encumbered over in England. Did you clean that up? Yes, all's clear, boss. Okay, fine. Start bringing it back. We're going to throw it into GLD. We're going to use our physical delivery mechanism, and we're going to get our shit out of there before we find out that those fucking guys don't really have gold that they say they have. And that's kind of where we are. And that's and that's the whole, everyone's taking their ball and going home. Globalism collapses. Gold becomes a globally used commodity, but a regionally priced commodity, right? Everyone wants to use it for collateral. No one can agree on the price now. And to Eric's point, which is really, really a good point. Actually, Tom said this as well. Okay. When someone says to you, the spot price is 2,500, and then they say, you can't get delivery for 62 days, as Eric said, it's 60 plus 2. It's still 2 days, Eric. We just tacked 60 on it. It's temporary, right? It's logistic. They literally added 60 days, but it's really 90. But they left it 2. It's T plus 62 now, Eric, not 60, 62. Because anyway, the point I'm trying to make is there are 2 ways you can change price: by changing price or by changing time, right? That's the bond market. Which brings us to my trash collector in Stanford 10 years ago. When we had a price spike in gas, he hit me with a surcharge. I'm like, what's this? It's a fuel surcharge. Gasoline prices are going up. And I'm like, how? And it was going on for a year, the surcharge. I go, at what point can I just say that you raised your rates, on trash pickup? And he goes, well, that's the thing. We can't do it right away. So we make the temporary permanent a couple years down the road. But yeah, it's not going back down. So you walk into a store and you say, whether it be a Swiss refiner, whether it be a Chinese jewelry store, or now, as it trickles up, whether it be the London, it's bullion, LBMA itself, it's like, I want the gold. Well, spot is 2,500. Well, when do you want it? Well, I want it in 2 days. No. We changed that rule. It's 2 days plus 60 or 90 or fucking 180. If you want it today, the price is spot plus 500. And that's it. And so what you do is instead of saying what the price is, the MSRP, right, on a car, you say, this is the MSRP. If you want it sooner, you have to pay more. If you want the MSRP, you have to wait for delivery 90 days. And so the premium added onto spot is the price. And that's it. That's where we are.
Okay, well, Vince, I think the LBMA price fixing, or whatever you call it, is going to break very soon. Because the way I see it, the way that it operated, I'm going to dumb it down and explain it, like, for the audience, okay? I did it on X, I'm going to do it right now. And, I know there's the EFP stuff, like complicated hedging, etc. I'm going to skip all that. I'm going to just go simple, okay? So the LBMA is like what I call the PHY brigade, okay? What I mean by that is you have people buying gold at the LBMA, right? And the LBMA has a, like I said, they claim that they have 8,535 tons. Forget about that. They don't have that, okay? They just have enough to deliver to where the PHY is, okay? So you have a PHY here, they'll just race over there and deliver, the gold there. And if you need the gold here, they'll just go wherever, okay?
Rob Peter to pay Paul, or Daisy.
Yeah, exactly. That's how, you guys talk about how they borrow the, GLD gold. They're doing it now, but the gold is staying in the US, okay? Before it went back to London, okay? So, again, like that, now they can't even get GLD gold, okay? So anyway, whatever, right? It's like the PHY brigade. They just, that thin layer of gold, it goes to whoever needs it. And then when the price get out of hand, they just throw paper at it. Okay, the paper is the fire is the hose. Okay,
Yes.
they pour water on it. The paper they just paper it over. They dilute it. That's why some people say the LBMA is not transparent. Okay, nobody knows exactly what the paper to physical ratio is, but a lot of people are telling me, experts are telling me that it's at least 100 to 1. Okay, so 100 pieces of paper versus one physical delivery, right? And that's how essentially they control. Like I call that manipulation. All right,
I agree.
like you can call it not like I understand now. I understand the point of view of Keith Weiner and the ex-JP Morgan guy, whatever, right? Because the way they look at it is, well, like there's enough physical gold, right? The fire brigade has that thin layer of gold. That's just efficient use of resources. Think about that, right?
Well, they're on a just-in-time supply chain. I'm
just
sorry,
in time.
Tom.
Okay, so you can call it that, right? Just in time, whatever, right? But
not manipulation, just in
like
time.
Okay, I get how it works, right? And then Ted Butterfield came in, and rest in peace, Ted. Like he was great, and he said that this game is going to be up. It's going to LBMA is going to break the day when the physical demand standing for physical delivery overwhelms the system, and that's where we are now.
And so what's interesting about that moment, and I agree with you, that was why I invoked FOFOA at the beginning of the podcast. Did anybody note that India suspended gold redemptions? Did anybody notice that South Korea has stopped selling gold coins? Both because I have a Twitter mate over in London, and he's a very savvy guy. We chat in DM all the time. So he sends me this stuff. I'm like, so how many countries have subordinated their sovereign gold to support freaking city of London?
Right.
Note that it's South Korea and India.
Right.
Okay.
Right.
This is important. Like that's how
bad
Eric, I think the leverage may be more than 100 to 1.
It's the global supply chain breaking.
Have you guys read that Bloomberg article saying that the LBMA is urging its members to borrow gold from central banks?
Yeah.
To deliver? Have you read that? That was it came out. It was one article. We talked about it and then it disappeared, right? Mm-hmm. Well, you know what? That's the US repatriating physical gold from sovereign countries, from other countries, okay, through the LBMA. Right. So yes, Tom, the LBMA is doing it, right? But it's in response to the demand from the Americans. That's right. Like if you're Donald Trump and you're invested, who you don't give you holding that contract, you want your physical gold, okay? Right. And you can't force me to cash settle because I'm the US government. I'm Uncle Sam, right? Anybody else, you're going to force me to cash settle, right? But I'm Uncle Sam, you can't do it. So now you're urging your members to go to whatever sovereign countries, get the physical gold to deliver to the US. Yeah, that is exactly what's happening.
No one ever expected the United States to be the one to start the bank run on physical gold. Right.
And the US is winning, okay? The US is winning.
Hold on, I want to ask a question for the listeners as well as for myself. Staying with Korea, right? Right. Korea suspends coin or bar sales. Are you saying that it could be a combination of things, right, Tom and Eric? Are you saying that Korea is protecting the gold they have, or they're nervous because they can no longer make these things because the gold they have on credit in London is hard to get back? Or are you saying China just fucking bought us out? You know what I mean? Like, what do you guys say?
It could be any of those things, or it could be that gold was loaned to the LBMA.
Right.
Subordinated by, subordinated. And then now the LBMA is having to try and call it all in.
Which brings us to the fire brigade concept, right? Right. So it's like, LBMA, Korea wants some gold. Let's give them some physical gold and throw some, paper water on it. There's something I wanted to add that is not circulating out there, but it's true. First of all, Andrew Maguire, whenever he talks about London, whenever he talks about the LBMA, his contacts are London, right? I mean, he's English, but his contacts actually are London and on the JP Morgan side as well. So he's really well heeled that way. What a lot of people don't know, and I think Andrew knows this, is that the LBM, this is important when you're trying to figure out how the LBMA is framed. Okay. The members of the LBMA, the bullion banks in London, they have a paper market too, a true paper market where the three of us are bullion banks, and I have a Korean customer who wants some of his gold back, right? And so what I do is I buy it from Tom on paper, and I use some of, basically they have a paper futures market, okay, which is like it's like a certificate or a warrant market. So I deliver and then I borrow some from you. Well, those of you familiar with the energy, the natural gas, the Enron crisis, during that era, all these energy firms were counterparties with each other. Duke, Enron, El Paso, Chesapeake, they were constantly borrowing and lending to each other to just kind of make ends meet while they were getting production online, kind of like leasing gold. Well, when it broke down at the merchant energy level, that's what they called them then. When it broke down, it's because Semper was involved in that. One or two of them's credit was no longer good. Very similar to what happened in the banking crisis, but at a physical commodity level. And so within the LBMA, let's say there's 5 of us at the table, and we take each other's paper to make these deliveries to Korea or India, and we say, I'll get it in 60 days, something like that. They're supposed to be physical, right? Well, the word is that one or more bullion banks there are not taking, it's like an interdealer market. The interdealer market for gold is collapsing or showing signs of collapse because there's a weak hand in the bunch. And when that happens, back in on the natural gas one, it was who the hell went under first? Was it Enron? Enron went under, and Duke went under, Enron went under, and all of a sudden the strong hands, the smart strong hands like Sempra or like JP Morgan now say, oh no, your paper's no longer good. We won't take that. We want the natural gas tomorrow.
And
so
this is no different. And Vince, this is no different than what happened in 2019 with European sovereign debt when JP Morgan refused to repo European sovereign debt at par.
Tell me, what was that about?
That's what created the SOFR crisis of September 2019.
Yeah, see, I wasn't
beginning of that year when the markets were freaking. JP Morgan was the one. Like I remember reading article after article on Zero Hedge was part of my whole argument.
But that was the repo crisis, right? That was the repo crisis.
The repo crisis, but it was really a SOFR crisis, right? Because at that point, SOFR was an illiquid market.
I didn't know it. You're like Mr. SOFR. I'm like, I didn't know about it until you.
Yeah. Well, in 2019, SOFR was an illiquid market. So what was happening was JP Morgan refused to repo your European sovereign debt across the board at par. They were probably offering a 30% haircut or whatever. Again, JP Morgan, right. Basically breaking down the old Eurodollar markets. And so they were starting the process of breaking the United States Eurodollar system off, the American repo markets off from the Eurodollar markets. And that caused a.
Wait, before you go down the hole, let me ask you a question. This is an important part for me, maybe for someone else. Because I know SOFR was being created to eventually replace LIBOR. Right. Was JP Morgan saying we're only going SOFR, fuck your LIBOR? Is that what happened?
I don't know. I don't know what I just know that what happened was there was a dollar liquidity crisis, and SOFR blew out to like 11% because it was, but really it was a repo crisis behind the scenes, but everybody talked about it as being a SOFR crisis. Probably what was going on was they blew out SOFR in order to try and discredit SOFR while it was in its infancy and try and kill the baby in its crib. What was really happening? What was really happening was that JP Morgan refused to repo European sovereign debt at par, which caused a crisis across the
LIBOR, and JP Morgan almost got taken down, at least in part. And that's really what probably happened was that Deutsche Bank or somebody else or Credit Suisse or somebody else was in actual trouble,
And then there was a massive demand for dollars offshore,
Right.
and they had to go to the Fed for it. And and people were willing to pay 10 or 11% for it. The Fed steps in, liquefies the market, and it was at that moment that I started the clock on a financial crisis for the next year. I said, about 6 months, just like Bear Stearns, just like the repo crisis of 2007 eventually gave us 6 months later, gave us the Bear Stearns vaporization. We were going to have something in March of 2020, which was, by the way, COVID.
Right, exactly.
Okay. COVID like it's like right. So all of these things, so all of these dislocations in the market like this, all of these little shocks are all about getting rid of all of this excessive leverage that is all downstream of the financial repression of the 2010s with the Fed at the zero bound under the tutelage or vandalism of Bernanke and Yellen. And then Powell's been doing everything he can to fix it, which is again, so now let's shift the conversation. Okay, because I think we've beaten the LBMA horse to death. Now let's shift the conversation to go, as Eric has pointed out, as Vince has pointed out, and why do the Americans want so much fucking gold? What's now the big thing? What's coming next? Why? I mean, I know I like gold, but you know why? But why? And I think it has to, of course, do with the sovereign wealth fund. You guys pick it up from there.
Well, because I think number one, the U.S. government is going to revalue physical gold to market value. That's what I think is going to happen. I'm not saying it from pure speculation, okay? Judy Shelton, she mentioned that. And then one of my followers is actually friends with a ex-central banker, okay, from the Fed. And that particular person said the same thing. They're going to revalue it market. And there are benefits to that, because that would be introduce the least shock to the system when they do that. And then I know that Vince talked about this with Brent back and forth, right? About the revaluation price point, okay?
That was guess what? Right? Yeah.
But guess what? If they do it at market, the U.S. government don't need to defend that price, because that's the natural price where, the world has determined the gold price to be, right? So somebody asked me just like, I guess 10 minutes before the show started, and I said, if they do it at market, the international flow of physical gold is going to be very similar to pre-revaluation. Of course, like, take out the US going crazy right now, repatriating gold, right? Take out that. I'm just saying it's going to be normal flows, which is what the US would want.
Right.
In a new world where physical gold is the neutral global reserve asset, which is where this is going, essentially, right?
Yeah, exactly.
So I think the end goal is to revalue gold. That's step one. And step two is to do what Judy Shelton is proposing, which is the U.S. Treasury gold bond. And you asked why did they want to do that? Well, like if a Treasury market dysfunction, right? Like, we all know the BRICS, most countries don't want the whole long duration U.S. Treasuries because of the duration risk, because of what happened with Russia, like at the beginning of the Ukraine war, push a button and all your stuff is frozen, right? Means nothing. Okay, so they want to basically rein that under control, the long end, and that's what they figured that they would do, which is to introduce gold in the mix. And also, give me one more second here, right? Recently, Jim Bianco was on I think it's Macro Visions, what he was on the show, okay?
Right.
And he talked about the Malago Accord, if you ever heard of that. Like that's like a theoretical, kind of like Bretton Woods 3.0, okay? Yeah. And it's going to happen, okay? So what's the number one problem that the US has? Like I said, US Treasuries, debt. Like US government has too much debt, right? So what Jim is saying is that the Trump administration is going to be very bold. And what they're going to ask US allies to do is to convert a lot of the US Treasuries that they're holding right now to zero coupon perpetual bonds, U.S. Treasury bonds. Now, like, I talked to Jim after his interview, and Jim is saying, yeah, like perpetual maybe like is too much. Even if you hold a gun behind people's head, they're not going to take it. So maybe it's going to be 50 years, 100 years, right? Okay. But the key is the US Treasury bond that they want the allies to convert to from their current, let's say 2% yield, is going to be zero coupon. Okay.
Right.
Now, this fits really well with what Judy Shelton is saying, right? Because imagine this, right? You're holding a US Treasury bond zero coupon. Inflation is going to kill you in 50 years, right? Okay. But if you have the option of redeeming your principal in 50 years in physical gold, calculated at the point of purchase, then it's okay. Because
Right.
if the US government inflate the currency, the physical gold is still going to be like whatever number of tons, right? Let's say, you buy a bunch of like US Treasury bonds, 50 years, or you convert it to that, zero coupon, and it's like 100 tons, let's say, or 50 tons, okay? In 50 years, it's still going to be 50 tons of physical gold. That's the idea. So I'm going to pass it off to Vince for the sovereign wealth fund. Okay.
If we'll give it to them. No, I'm just
Yeah, well, there's that too.
Okay. Well,
Yeah, but no, Eric, I think that's a really interesting point, because I read that same point by that post by Jim Bianco. I saw that, and I'm like, somebody sent it to me, and I was like, just trying to wrap my head around it, tying it to some form of gold cover clause in order to give the zero coupon bond some kind of a nominal yield. Makes a lot of sense.
Yes.
Makes a lot of sense.
Yes.
Well, that's the throwing it out on the yield curve, giving them an interest rate, and giving them a conversion ability. Do you want interest rates? Do you want, exactly.
And then, at the end of the day, we'll do later on is that we'll buy them all back at face value, and we'll give them depreciated dollars at face value. There'll be a settlement clause in there that they'll buy the face value of the bond plus the premium for the gold appreciation. But at that point, we won't care because we'll have depreciated. So so that makes a lot of sense. So now, Vince, let's talk about your. This is important because overall, what we're all talking about here are various plans and bits and pieces of the puzzle for the United States to recapitalize itself. Because, as Eric pointed out, our biggest problem is the $36 trillion worth of Treasury debt. So now, what I want to bring in here is, we've set the stage for this. There are many ways, and I've said for years, there are many ways to skin the recapitalization cat, because we have two problems. Let's start with the first part of the problem. The first one is a cash flow problem, right? As Bissent said at his confirmation hearing, we don't have a revenue problem. We have a spending problem. We spend more than we take in. So you fix the cash flow, right? If you're in a bad situation and you're spending more than you make, you got to get spending down the equivalent to what you're bringing in. Right. Then it goes from being an income statement problem to a balance sheet problem. How do you balance liabilities and assets? So now what we've been kind of talking about is one aspect of the revaluation of American assets in order to fix the problem. Doge, of course, has gone in to fix the revenue side of the problem by uncovering all the corruption, and then making it easy to get rid of the spending problem. And so that's the first sort of and then the second thing is, in a month, we have the reconciliation vote for the deadline for reconciliation to extend the budget. That's what they're focused on right now. March 15th is the big day for that. They've got to get that done. And after that, everything else they've got on the table, I think, is going to start filtering into the zeitgeist. But let's talk about Vince's idea, because Vince has been talking about the sinking fund, and I hadn't even ever heard the term before. You mentioned it last week, and I had no idea what you were talking about. I have some idea now, but I'd like you to go through the whole thing for us, because I think it would be really, really valuable.
It's a savings account, but I think before I get into particulars of the sovereign wealth fund as a sinking fund, until recently, I was very much in tune with the whole bond, yield curve, zero coupon, convertibility, Judy Shelton, conversations that Tom and I have had. And I'm not against it, but I think it's a lot harder than it looks. I'm not going to get into the details of it, except to say, look at the GIST card bond where you convert into gold. Now, I'm not saying it won't happen. I'm saying it's difficult. If it were to happen, it would likely happen. And I think there's a very good chance it would happen. But if it were to happen, it would not be a public bond for speculation. It will be an international debt settlement thing, kind of like, well, frankly, during mercantile error, we would have paper that everyone traded for money, and then they would settle their debts in gold bonds. So kind of like what believe it or not, what Keynes was proposing back in the day, which ties to all of this, goes back to what I'm just saying right now, to M-Trade and BRICS. The BRICS were trying to make gold the ultimate collateral to replace treasuries. And that's one of the reasons they brought it back. And now it's our turn, right? So Americans are going to do it differently, do it better. However, so what do we need the gold for, right? That brings you to what do we need the gold for if we're not going on a gold standard? Well, we're either going to issue bonds, right, in the Judy Shelton concept, or we're going to create something. If we were to do it, ideally, speaking from my own bias, if you take the money, here's the reason I thought of this, right? So Trump signs an executive order. We all know this visual. He signs the executive order creating a sovereign wealth fund. We're going to buy TikTok. We're going to buy Bitcoin. We're going to buy FX. And then, Lutnick is very happy about that. And then Bessent stands up and he says, we're going to figure out a way to monetize U.S. assets. And I'm like, what the fuck is he saying that for? The sovereign wealth fund is what we spend it on, not what we, well, I'm like, well, if you're a deficit country, if you're a country that doesn't have positive cash flow, you got to monetize an asset. And I'm like, oh, what's you going to monetize? And Tom, you're going to get into this housing and stuff like that, Freddie Mac, Fannie Mae, all that stuff, selling lands, who knows? But the one that comes to mind that's easiest to wrap your head around is gold. So we have gold. We're probably acquiring more gold. It will be the collateral of choice, whether combined with a treasury or not. Look, I'm in China, or I'm in not even necessarily China, but I'm in a country that wants to do trade with the U.S. And I don't want to take dollars anymore. I'll take gold. Well, the U.S. needs to have fucking gold, and it needs to have it ready. Okay, so cash flow versus revenues comes down to free cash flow and debt interest. So now we get into the sinking fund. The sovereign wealth fund needs to be funded by the Treasury. Okay, the Treasury gives it the money, the TGA. Now they can create money out of thin air, and give it a loan. They can do there are all different ways to do it. You could take it from revenues. But the term sinking fund originated from, without going too historical on it, it was something that was, believe it or not, popular in Europe and in England. I think it was William Pitt. And he had a version of it that said, no matter what, you're putting aside $5 of every $100 you make at government level to retire debt 30 years from now. So you didn't buy the debt. You just bought money and put it aside. It's kind of, that's the way it worked, a very simple version. And Alexander Hamilton says, and everybody, by the way, everybody loved it. It was like, oh, but there's stresses involved in that concept. We're not making it. So Alexander Hamilton tweaks it in a major way without getting into the minutia of it. He basically says, look, we're not going to buy $5 every month, no matter what, because there's going to be months that we can't do. We need some flexibility. So he says, we're going to create a sinking fund that's a little different. And the sinking fund for him was we're going to buy, we're going to retire. Is the postal, if you want to look it up, it's the postal sinking fund. And it's not obscure. It made him a hero in the country. It was part of his big fight with Adams, with John Adams. But anyway, going back to the present. So the mechanics of it would go like this. We revalue the gold at $3,000. I'm not saying that will happen, and I don't think it will happen at $3,000. But here's why it could happen, echoing something because Eric brought it up. It was the BRICS that said we wanted to make sure that the price of gold isn't manipulated or spoofed to hurt us on any given day. It's the BRICS in their M-Trade product, whether it happens or not, whatever it's called, M-BRICS or BRICS Trade, that said, we're not going to use the spot price of gold anymore. We're going to use a moving average. And so they're reducing the volatility because we all believe gold is what it is, and we just don't trust the U.S. to not spoof it when they want to buy our gold. And so that's what. So the U.S. if they were to use $3,000 an ounce, if they were used a free market floating price, and not fix it, and I don't think they would, but if they would have to use some sort of a moving average. Let's assume, however, and I'm sorry, Tom.
No, just go. You're getting into the weeds of trying to justify what's going to happen. Just say we revalue gold at $3,000 an ounce. Now what?
We need to put money in the sovereign wealth fund to go out and buy TikTok or whatever it is we're going to buy. Okay, so whatever we're going to buy, wherever it's going to go in that sovereign wealth fund, we're going to go like this: value gold to $3,000. Change the value on the balance sheet. You could sell the gold, as Brent had said, not suggested, said. Hi, Brent. But we wouldn't do that. We wouldn't do that. So we didn't do it in 73. We won't do it now, right? So you revalue the gold as $3,000. You take that increase, let's call it $800 billion in cash, and it's an accounting entry. You go, okay, it's the $1 trillion platinum coin concept. It's actually priced at $3,000, and you put the money on the Treasury's balance sheet as reflected in what's called the TGA, which is, if you're trying to, what's the Treasury general account? It's the checking account for the government. That's what it is. It's cash that they make up or take away from. And then you say, with that TGA money, we're going to put a portion of it in the sovereign wealth fund to go out and buy TikTok, to go out and buy whatever they want, because we trust them. That's not a sinking fund. That's the money being invested in the sovereign wealth fund by the TGA, which Besant would run both of. The sinking fund, tying that in, is like this. The government says, the TGA, the Treasury says to the sovereign wealth fund, we'll give you this money on condition that you only, or a portion of it, you retire bonds with it. Now, if you do that, look, remonetizing gold is a QE event. It's bullish for assets.
Don't get lost, Vince. If you do this, you're going to put the treasuries in the sovereign wealth fund.
Right. The sovereign wealth fund borrows money from the Treasury at 0% from the gold refinancing. It takes that money and it goes out and it buys treasuries 10 to 15 years out on the curve, whether it be all at once or over time, but it buys them and it saves us 4.5%, 5% on the curve, and it holds the treasuries. The sovereign wealth fund is an investor in American debt. And what that does is it reduces debt, it frees up cash flow, it kickstarts the economy in a way that no one would understand, no one can even imagine, and it puts gold at a higher price. So the way I was thinking about it was that the Treasury, the sovereign wealth fund buys some amount of treasuries. The Treasury pays the coupon on those bonds back to the sovereign wealth fund, and the coupon payments then are used to go out and buy more bonds and then as they retire off, but the money is never, but the bonds are then retired just the same way that the Fed is allowing. It's a QT event, not a QE event. It's a QT event because it's exactly the same as the Fed, but allowing all the bonds that it bought to roll off its balance sheet while they've been collecting the coupons the entire time. As a matter of fact, we have a sinking fund. It's called the Fed. The Fed's been doing the exact same thing. Right. Well, I mean, the difference between what the Fed's doing and what the sovereign wealth fund will do is the Fed does QE, it buys bonds, and it holds the bonds. And then the government still has to, in QE, the government then starts to finance its debt shorter. We're not creating debt. No. It's money out of nowhere. So we're not holding it. We're just taking gold and converting it to bonds. We're just taking gold and we're buying back some of our treasuries with it. We're moving the gold on one side of the balance sheet, moving it back into treasuries, and then out of our cash flow, paying ourselves, saving, just like the guy said originally, we'll save $5 out of every 100. No, what we're doing now is we're 2.5%, 3%, 4%, whatever it is, all this debt that's out there, we're going to pay the coupons to the sovereign wealth fund and then eventually retire. Right. So to do the QE QT thing in very simple form, the Fed is doing the Treasury gets the benefits of QE, the sovereign wealth fund gets the QT. The sovereign wealth fund owns the bonds, and the thing is, the sovereign wealth fund never has to sell them. The sovereign wealth fund holds them to maturity. That's part of the deal. The likelihood of that happening is small. The likelihood of it happening in part is large. So the effects are, you do bonds. Let's say you do gold bonds, right? You throw it on the yield curve. You do Judy Shelton. You do Mar-a-Lago, which is, I'm sure this is all part of Mar-a-Lago. Or maybe you do a combination of things. And we need the gold for something. And that something is to create the new world order, to secure international trade, and at the same time, protect and not disrupt the dollar. And the sovereign wealth fund becomes the shock absorber for that. Look, if we revalue,
that's one aspect of it. I think there are other ways of skinning this cat as well. But I think this is a very, very valuable portion of the conversation, because I also think that there's another angle on this as well. And Besant has talked about a couple of other things as well. The other assets to monetize on the balance sheet, and Besant's already talked about this, so I'm not like throwing out anything that's not real, which is that we're going to monetize the savings of Americans. And where do we have most of our savings?
Oh, yeah.
In our housing equity. There's $32 trillion at best estimate in housing equity in the United States. Now, you can argue it's all at inflated prices, Bob.
No, I'm not smiling because I'm smiling because Hartnett's already talked about that as well.
Yeah,
so
yeah.
this
is a very easy and this is a very easy thing. All Besant has already talked about is it's very simple, folks. In exchange for you not selling your house for the duration of the term, you will get a 0% HELOC.
Right.
That you have to put that, but the proceeds from that HELOC go into U.S. Treasuries.
Right.
And so as opposed to us paying out to international investors or to this one, that, no. You're going to take the equity in your house and we're going to give you, it's basically reverse UBI. In effect, what it really is a refund on all the fucking taxes that they've stolen from us over the last 40 years.
Right.
As a monthly check, as effectively a monthly check for the coupon payments for the bond. So whatever it is. So you want to, and in exchange for that, so they'll write you a 0% HELOC at an 80% loan to value ratio. The average house in America has $311,000 in equity.
Mm-hmm.
Do the math. Yeah.
Right.
That's potentially $24 trillion worth of, not saying that we're going to get $24 trillion. You'll probably get about 20% buy-in at best.
Right. No, that's why I think
$5 to $6 trillion worth. It's $5 to $6 trillion worth of capitalization.
That's why you're going to have choices. America doesn't say you have to do this. It says you can do this, this, or this. You can buy a gold bond that matures in 30 years, as Eric and Judy are talking about. That's going to give you gold. Maybe we'll put a portion of the sovereign wealth.
Maybe even this HELOC will have a gold cover, a 5% gold cover clause in it, in order to expand the yield.
Fuck gold for the HELOC, but yeah, we could do that. But here's the HELOC makes infinite sense. And I'm going to tell people why in simple terms. You don't have to deal with physical. Number one. Number two, it's a government sponsored enterprise. Freddie Mac, Fannie Mae, Helen Mack, whatever the fuck.
And they guarantee the debt, and then they package up the mortgage. They package them up as mortgage-backed securities and send them all out into the world.
Exactly. And you say, we're going to give you a 0% loan, provided 80% of it goes into U.S. Treasuries. And this is a fucking home run for me because it's something that, look. If you're an accountant, right? I'm not an accountant, but if you're an accountant, you say there's either public debt or private debt. And all it does is goes back and forth. Right now, the public, meaning the government has all the debt, and we need U.S. citizens to invest in America again. And U.S. citizens are like, fuck that. I got my house. I'm going to buy stocks. The government needs to incentivize Americans to buy government debt because no one else is doing it, right? And how do you do that? Good.
And you take away the risk of having to go out and buy a HELOC for 8% and then take that money and put it in the stock market and try and figure out how to make 9%.
Right.
You don't do that. It's like, look, it's really simple. You don't get to sell it. You can't do anything with it. You have to stay in your community. You have to pledge not to sell the house. So you can buy a 5-year if you want to, or 7 or 10 or 30, all depends on what you want to do. And we'll give you a rate based on that. And then you're going to get a check from us every month for the proceeds, for the coupon on this thing. And it's a massive stimulus. It's a massive stimulus for Main Street.
That's the home run. I mean, look at it from a government's point of view. America doesn't do everything wrong. Look at the value of our housing. There are piggy banks. The stock market is a piggy bank. You can't monetize that. It's already money. The housing is kind of like the house here. Housing is the sinking fund.
Yes.
All right. And you need the U.S. citizen to buy American because no one else. Going back to something Posar said, we need Americans to buy the debt because no one else will. So there are other ways to do that, but that's the big thing. And so you say to Americans, buy American. As to your point, we're going to give you whatever percent. You don't have to pay taxes, and you've retired a portion of the debt because most American debt is held by Americans.
And then guess what happens to the American credit rating and everything else? Like it all goes right back up because America's credit rating goes through the roof because now it's all securitized by because the debt is now securitized with the cash flow streams of Americans now using that money to build new small businesses and to reinvest in their communities, as opposed to being deracinated fucking Momo monkeys.
To just put one like a phrase on it before I think I want to say something. Just to put a phrase on it, nationalism is frowned on in the West.
Yes.
However, you need to make America great again, and so you can't say buy American for war bonds, but you have to create a financial nationalism, and in doing that. In creating financial nationalism by American, whatever it is you're going to do, invest in America, you're going to make the world look at us and go, oh, fuck. We've basically awoken a sleeping giant again. Exactly. That's basically it.
All right, Eric, you want to jump in on this or you got anything to say about this?
Well, I do. I think, that's I mean, Vince had a lot of good things to say about the SWF, Sovereign Wealth Fund. But isn't all this of what you guys are saying is basically, the U.S. government, Trump and Bessent saying that America is going to start investing in America again, meaning that ongoing, there's going to be some sort of a soft, capital controls, like China.
Oh, yeah.
There's this guy I'm talking to. His name is Matt Smith. He is with Doug Casey. And he did a show explaining this. He was talking about how, Donald Trump and Bessent are actually looking at China as a model because it worked out so well for China, right? Like the reason why you look at what's his name? Posar, Sultan Posar, right?
Right.
He explained the colonial model really well, like how, the West, America, how they, would exploit third world countries, extract resources from them, labor from them, right? Make the most margin out of that manufacturing value chain, and then just leave those, third world countries in the dust, right? But what China did is it had really good capital controls, and it forced all these Chinese companies to reinvest within China.
That's right.
You see, a lot of people, they don't understand why Jack Ma got into trouble, like the Alibaba guy. You know why he got in trouble? Because he went against that. Those guys were buying garbage everywhere, all over the world. And you're not supposed to do that. You're supposed to take that money and reinvest in China. That's why if you go to China now, Tom, it's like Back to the Future. I'm telling you. It's literally 10 years more advanced than the US in terms of just, payment systems, electronics, etc., because they invested heavily in the infrastructure, like the hard infrastructure in the past, and in the most recent 10 years in the software, in the software infrastructure, right? So I think Donald Trump and Bessent want to take that model and implement it in America. Like the Sovereign Wealth Fund is part of that, right? Is to just, the US government take the lead and invest in stuff that makes America great again. I actually think that wage inflation is going to come back in America because every single time
it's already happening.
Every single time it's like top down inflation. It's BS basically, right? The little guy always gets screwed. I think Luke Roman had a chart out on his X is Basically, the American worker hasn't got like a real wage increase in 40 years, essentially, right? Has been like detached from Wall Street made all the money. So I think what Donald Trump and Biden want to do is to this time, first of all, just jack up the tariffs. So that's a protective moat. It doesn't matter how cheap China makes stuff. If like tariffs actually work, I've been telling people, like a lot of people say tariffs don't work. Guess what? I'm in the manufacturing business. I know a guy. I'm not going to name which industry he's in, but he's like a boomer basically, and he worked with American manufacturing back in the 70s. Okay, like you guys used to actually make stuff, and then he was the guy who offshored all that stuff first to Japan, then to China. Okay, he did all that, and guess what? Now he's like really old, and like. Yeah, America got all these really smart kids doing the programming, right? But the manufacturing is kind of like a lost art, okay? Like the guys who know how to do it, they're boomers, okay? So they hired him back as a consultant. And now the US is manufacturing that particular industrial product in the US, okay? In Texas, by the way. Because that's where you guys got like, really good tax laws, right? Okay? In Texas. His boss wanted to move the stuff to Mexico, but guess what? You would never guess it. Biden stopped it. Okay.
Well, that's your
Donald Trump did.
concept.
Donald Trump did the first round of tariffs, and Biden, he's stupid, like maybe senile, but he stopped this guy, okay, from moving the factory to Mexico, right? So the factory is still in the U.S., and I bet you Donald Trump is not gonna let these sleazy guys move it to Mexico. It's not gonna happen. Especially with the tariffs that are happening, right? So tariffs work, okay? Reshoring is happening.
What's
so
good,
you're right, Tom.
Really interesting, Eric. No, on that point, I agree with you that we are moving to a two-tiered monetary system in the United States. We're going to have a domestic dollar and an offshore dollar.
Right.
I am firmly convinced of this, and I also think that domestic dollar is going to be hard asset backed in some to a greater extent than it is currently. Then the dollar, there's going to be an offshore euro dollar, which is going to be managed by the Fed. The Fed is going to be where if you're offshore and you want access to U.S. capital markets, you have to go through the Fed and pay the Fed's rates for it. But Americans are going to get dollars at a preferential rate, a preferential cost.
Right. How we protect it, it's going to be capital controls.
Yes, it's going to be protected that way. Absolutely. It's going to be, and it may be digital, and it may, like the proceeds that come from, say the cash for equity swap that I just talked about. I mean, that could easily just be, a treasury, it doesn't have to be circulating cash, and it doesn't have to be Federal Reserve notes either. You can have multiple currencies running, next to each other, right? I remember studying Vietnam 12 years ago, and my partner at the time, Peter, was like, "Dude, Vietnam is a tri-currency country. Like, I buy my coffee in dong, I save in dollars, and I buy my houses in gold. Like that was the way it worked at the time. Well, nobody used the dong for anything other than going to fucking Starbucks. And then Bitcoin in 2012 was making inroads all across Vietnam as a base transactional currency because the dong was so fucking bad. So we're not used to this as Americans. We're used to the dollar being everything, like there being one singular dollar as a unit of account for the world. There's going to be an offshore dollar that's a unit of account for trade, as Vince and I have talked about many times. It's going to get tokenized. Okay. Right. And I'm not, and there's going to be control.
And it'll also interface with whatever M trade becomes, that type of stuff.
M-Bridge or all that stuff. Becomes. Like, there's going to be a mechanism. There's going to be U.S. dollar stable coins across multiple networks.
Yep.
I happen to think that Ripple is being chosen for this, by the way.
Right.
I'm almost convinced at this point that Ripple is being chosen for this. And I only came to this conclusion in about the last 3 weeks because I've really been watching all the dominoes, like all the things slot into place. It's like somebody's rebuilding the Jenga tower of this thing, and every point the Jenga tower of our financial collapse, like it's all like Ripple. Ripple solves this, and it solves this, and it solves this, and it solves that, and it kills the Bank of England because it's. What do you think? What is Ripple ultimately? What is XRP as a token? It's the replacement for the British pound.
Is it?
It's what it is. It's the intermediary
No,
currency that turned Chilean pesos into fucking Turkish lira.
Right.
And it's the liquidity pool, as opposed to having to go to Standard Chartered or somebody else who's got these expensive liquidity pools of these esoteric currencies.
Right. It's a swap dealer. I want to, Eric made a point that I want to add to from a zoomed out perspective. He talked about America moving to the China model, and that's such a geopolitical statement. And coming from people that are geopolitically savvier than me, I learned the following: that the U.S. has been, this is the whole color war thing. The U.S. has been trying to forever go into countries and inject democracy. And then, or if they can't do that, they'll inject capitalism, and democracy, they're assured, will follow. That's been the model, right? That's whether it's worked or not is not the point. But China, and I'm not a China expert, I would think that Eric knows a little more about it than I do. But China, so we have a democratic capitalist society, and China and the East in general goes from a authoritarian socialist or communist society, and they drop the socialism like the US hoped. Oh, look, they took capitalism, they're going to take democracy. No, they're staying authoritarian. And when you have an authoritarian capitalist society, you can get shit done without asking the plebs to vote every 5 minutes. And so capital controls come into play. You can enforce nationalism. You can heal the country, which makes sense, because where we are now, we have to adopt a slightly authoritarian capitalistic principle to get us through the next stage. That's what Eric's point was. I thought was a very good point. Anyway,
it is a very good point.
But you know what our problem is, and in extension to Russia as well, right? Is that Putin and Xi, they're really, really great leaders, in my opinion. Okay, I mean they make things work. But what's going to happen after Putin and Xi? You see,
what's going to happen after Putin? We've been fucking waiting for Putin to die for 5 years.
I know, because the U.S. government, especially the neocons, think that once Putin dies, it's going to be chaos, right? So it's the same thing that I worry about. If Xi is gone, what's going to happen, right? Because we don't have a democratically elected top leader. Do you see what I'm saying, right?
Yeah, no, so Eric, I think you're absolutely right. And I think but I'll be honest with you. This is a couple of things that I want you to think about. And I think it's very clear where the tea leaves are being, you can read the tea leaves geopolitically. We're headed for Yalta 2, where the three people at the table are Trump, Putin, and Xi. Not the Europeans will not be at the table. The Brits will not be at the table. And they're going to carve up the world. Yep. It's coming. My good friend Alex Craner has finally started to put these things together in recent. We've done a couple of talks, he and I, and he's got some stuff on this. I think what Trump is looking at, if you look at everything that Trump has been talking about, and you look at Putin saying, hey, he's invited both Trump and Xi to Victory in Europe Day, which understand for people who don't understand this is like the 4th of July for Russians. It's the biggest day of the year, and they've been invited to this. So this week, as we sit down right now, Marco Rubio and Sergei Lavrov has had 4.5 hours worth of talks that were, quote unquote, very productive. Zelensky was in the UAE and canceled his trip to Saudi Arabia and went home. Why? That trip was scheduled months ago, and Trump hastily put together a summit in Saudi Arabia and told Zelensky he wasn't invited.
Yeah, that's the whole.
That's the biggest fucking, these are my balls, fuck you thing I have seen since Powell turned around and went, close the fucking door.
Very
guys, what's coming is going to be, we can see it's all staring us in the face. So the worry about what's going to come after these three men, it starts with the United States finally getting clear of their European fetish and realizing that we are not Europeans, we are Americans.
Right.
That is the cultural shift that's beginning to occur right now.
Right.
Trump is in the process of building a durable political advantage that destroys the Democrats for the next generation or more, similar to what FDR did to the Republicans before and during World War II.
Right. Right.
That has to happen in order to bring the volatility and the uncertainty of the global trade system down. Because right now, as Pepe Escobar has rightly called us, the empire of chaos. Now, are we taking our cues from the real vampires of Europe? I think so, but that's you guys can salt that shit to taste. I don't care. The reality is that if we stop engendering chaos around the world and we have a political system that is relatively stable, that means oil becomes investable again. It means that everything from the ground up becomes a lot less uncertain, and now investment can happen on a longer time horizon globally, even though everybody's retreated to their own individual corners with their own areas of influence. The Russians want this because they don't want to be China's bitch in the long run. The Chinese don't really want to take over the world because they understand. I think they understand how they don't
want to be the global cop. I agree with that.
They don't want to be they've looked at what the United States has turned into. They get it. Like they may have greater ambitions than they currently have shown their hand to, and that's, again, I'm going to take the American perspective on this, salt it to taste. So, but I think that this is a very big moment where if we can have an American leader that can work with a Russian and Chinese leader to say, this is the way the world is going to work out because the Americans are going to be stable because they've now just set the political landscape in the US for the next 30 years. Trump, then Vance, then Gabbard, then this, then that. And you can see the next 20 years of American politics staring you in the face. And that's enough time to remake the world and end this 400-year fucking nightmare we've been living with since the first central bank was formed by the goddamn Dutch and then perfected by the British.
The U.S. wants to create a global rat pack. Watch. Yeah. Everybody talks about diversity. Diversity is, you're equal to me. No. Diversity is the black guy and the Italian guy and the Jewish guy and the gay guy that's Liberace, openly gay, all looking at each other saying separate but equal, but not in a racial way. The point is that's the rap pack.
And let's all get together and sing really great music.
Fucking rat pack stuff. It's like it's where we should be. It's we have differences.
Beautiful moment, Vince.
Let's respect them. Right?
Yeah. No. I think that's what we're looking at. And I think that's what Trump wants. And now what he has to do is close escrow on all of this. And he's got 4 years to do it. And I'll be honest with you, he wants to get 90% of this done by July 4th of next year, the 250th anniversary of the Declaration of Independence. In time for the midterms, where then he can go to the people and go, I've done all this. Give me a supermajority in the House and the Senate, and we'll end the income tax and we'll end all of this bullshit and we'll move forward with the world. And that's what I think he wants.
He's trying to keep them right. All the stuff with Doge, aside from going towards his accomplishments, it keeps the midterms becoming a smaller problem for him. He won't go a lame duck faster than usual, is what I'm getting at. So yeah, I think that's. I'm telling you, it's the rat pack. It's like it's the fucking rat pack.
So I mean, to Eric's anxiety about what happens after Putin and Xi, the weak link in the chain is the Americans. And it's why we have to keep our focus on it in the short term.
We are. What happens if Trump gets dementia in his third year? He needs to have shit set up right now.
What if the Brits fucking kill him? Because it's not like they haven't killed our presidents in the past. These fucking people.
You think it was them who tried to kill Trump? Like back, during the election?
When you use the word deep state, what you really mean are the old connections to Europe.
Right.
That's where all the money flows through, all the NGO money. It's all being traced. We've only seen a small piece of it $46 billion a year to USAID. Like, where do you think that money was going? And you think there's not the same amount of money in the Department of Defense, the State Department? How about 20 million people over the age of 100 on Social Security?
Right.
Like, the numbers are staggering, folks.
I know. Right. We're buying influence. I'm like, I see where Eric's coming from, but it's kind of like this, Eric. I'm just going to like add a footnote, a color commentary. The scandal in the U.S. is all about using woke ideology to buy influence, or because that's the product, that's the brand that worked. Who are we buying influence for? To protect, ultimately, to protect British influence. So that's
British and European influence. And you can see the way they're reacting to all of this. Like, the help is getting uppity. That's right, I've been saying this for years. If you look at the world through a European oligarchs perspective, we're all just the fucking help, dude.
Yep.
Like, the Eastern Europeans get to be the janitors and the whores, right? Yeah. And the Americans get to be the gendarme and the ditch diggers, and the brown people of Africa get to dig up all the wealth and send it home, and the Arabs get to produce all the oil, and
don't make me
we're just a help to them.
Don't make me channel you. Europe is the fucking plantation. These fucking people, they've got natural resources they have in mind, exploiting the whole world financially for the last 50 years. And before that, the last 200 years, they were exploiting the third world for physical resources. Yeah, they don't know how to do anything. And I'm almost quoting Isabella Kaminska, who is, a tried and true FT, centrist European. When it's over, Europe will make a great tourist destination for a museum. That's what Europe is. It's a fucking museum. Yes. That's what it is. It should be like the summer vacation spot for Floridians. That's what it should be.
And the funny part about this,
I'm really channeling you, Tom. Stop me,
really
Eric.
Good.
Stop.
It's really good. What I'm saying is, go look at the way they have reacted in the last 72 hours since Trump put this meeting together with Putin. Emergency meetings of the European Commission, them screaming. Vance goes into the Munich Security Conference and tells them all they're a bunch of fucking Nazis. For all intents and purposes, that's what he's called them. He was nice about it. He was calm. He wasn't me. He was all nice and calm and properly, divinely masculine. Same thing with friggin' Pete Hegseth. They just walked in there like, no, your shit does stink, and we think you suck, and we don't share your values. Like, this has been the lie that they keep propagating. This whole idea of the Judeo-Christian tradition, that's bullshit. The shared values that Americans have shared values with the Europeans. No, we don't. We were settled by the Europeans who fucking left because we hated Europe. Like,
the Magna Carta was a good idea.
And Americans that has been beaten. They've tried to beat it out of us, and it's now it's being allowed to flourish again and point the finger at the abusive parents.
Right. We're still an ideological colony to them.
Yes.
We're still a colony.
Oh, they literally think that we're just a bunch of fucking, Yanks. These people live in an echo chamber so goddamn small. It would rent for $400 a month on the Upper East Side. Yeah. Like, I'm dead serious. Like, if you listen to Viktor Orban, he talks about this all the time. They're insane.
I'm just going to interject here for a bit. Like, I'm going to throw in silver as a wrench, okay, to this conversation. Guess what, guys? I think the price manipulation of silver, suppressing it at a ridiculously low level.
Yes.
The days are numbered, okay? Those days are numbered. And I've been saying it in other interviews because, like I said, in the past, the West, the US and the West, right? Like, the guys you're talking about, like the Europeans, right? The European oligarch, whatever, right? They extracted a large portion of the value of the profit from any manufacturing in the world, right?
Yes.
And now, guess what? China's doing everything by themselves, from beginning to end, from design to manufacturing to sales. Okay, everything. Okay.
Yes.
And like, I mean, it takes time and effort and money to suppress the price of silver. And we've seen that at the LBMA, right? It takes
Agreed.
it
Agreed.
it like I mean people you know what's funny? Like people always thought China wanted the price of silver higher. Why would China want the price of silver higher? It's a critical component of manufacturing. It's
It's a base
ridiculous, right?
cost.
Exactly. It was working with JP Morgan. JP Morgan was helping China to suppress the price of silver
So they could
for
buy
the
more.
longest time. So that they can buy more, exactly, right? But those days are over. Those days are over because what is China doing? Is China's building like a lot of EVs, okay, and it's decreasing its need of oil, okay. Now, oil is what the West uses to control China. So, what is the new oil for China? Is silver, because you need silver in all these EVs. As a matter of fact, like we did some calculations, although each EV only has 2 ounces of silver, they say that it adds up to basically the entire world's. It's more than the entire world's mining supply of silver. The need of silver from EVs. Okay, so why would the West subsidize China with cheap silver anymore? They won't. It's over. That game is over.
That's a really good point.
It's just like that's why, like with the price of gold going up and silver is tied to the hip with gold, silver's price is going to go up. Silver is going to be unleashed because, like, I don't think it hurts the West if the price of silver is at like let's say $100. It's not going to hurt that much, right?
Nope.
Because it's only a small component of everything, right? But it's going to hurt China for the lower end EVs, okay? Because China right now is pumping out EVs that are below $10,000.
Right.
Okay, and if you jack up that silver price, right? That's going to add to that EV cost. Low. I'm talking about low end, right? It's just not going to help China as much. That's all I'm saying. And plus,
it's a very good point.
Also,
it really is.
I'm just going to add one more thing. Silver is a critical component of the military industrial complex. For military, like for missiles, etc. Whatever. Anything military has a lot of silver in it, right? Mm-hmm. So, like, again, why would the West? A lot of mining companies are Western owned, American owned, right? Why the heck would you be digging up all the silver in the Grand Canyon, shipping it to China for $32 a troy ounce?
Makes no sense.
Does that make any sense to you? I mean, no.
Well, again, let's also talk about what Trump has put on the table. Again, I think that what I said earlier about the a second coming of Yalta, I think is the first overture of that was Trump saying, "Hey, Xi, Putin, let's all cut our defense budgets by 50%. Yeah. Why are we spending all this money on these things? We're not really. Why don't we have enough for our own national defenses and to protect our own shipping lanes, our own international, really our own international interest in terms of shipping?
Only better. Right.
Why are we doing this? We're wasting our time doing this when, and then there's Elon Musk standing there going, yeah, let's go to Mars. Like, let's think big as opposed to thinking bombs. And, this is, it's a mindset shift that we're only beginning to wrap our heads around, because all of us have lived under the system of abuse and learned helplessness. I really believe this, and especially in the West. And this is all when I talk about this, I'm talking about it in terms of this has been a psy-op, and the world does not have to look the way it has. And the hardest part for all of us is to reframe that, because we all have our imprinting, right? We all grew up in this shit. We're all, I don't know, I'm 57. Vince is probably, we're all probably of that same age. Like when I was 15,
Eric's young.
Yeah, of course he is, because you're making a play on his name. But I mean, my point being is that when I was 15, right? I'm sitting there listening to Grace Under Pressure and, the Final Cut and all this shit, wondering when I'm going to get fucking nuked.
Right.
Okay. So my entire life has been this shit. I'm 9 years old, like 11 years old, sitting in the back of my parents' car driving hearing about the West Side Highway falling down, and then we're about to get on the Bruckner to go visit my fucking grandparents over in Queens. I'm like, I don't want to go over that. I don't want to go over that thing. It might fall down. I grew up in the entire life of not wanting to go over bridges because all I can think about is this stuff, right? So what I'm saying is, in the financial markets, we've had an entire 2 generations of bond traders in the U.S. who don't know how to trade a bear market because they've never had to experience a real bear market. They've experienced bear market corrections, but now that we're in a bear market for U.S. debt, they don't know what to do. Okay. And now we're going to have gold traders who don't know what it looks like to trade an unfettered gold price. We've always known that the US and the LBMA are going to be suppressing the price. And,
I was short for 3 days. I'm sorry. I just want to say, yes, I was short for 3 days. Like, there's your point. The point is, I'm a gold bull, and even I'm getting fucking caught short once in a while. Yeah, it's the market.
My point is that we all have to reframe. So it was like when I was sitting here saying for 2 years ago, guys, there are ways to recapitalize this country. We can cut $2 trillion from the budget. And everybody's like, no, you can't. No, this is all the entitlement spending is a fixed cost. I'm like, really? How many of those people are collecting Social Security are fraud? How many people who are on disability? Fraud. How much of that is going to illegal aliens? Fraud. How much of this? How much Medicaid? I know flat out, easily. I know multiple people who have come to me and said, look, dude, I can point to in my own little corner of healthcare, I can point to $50 billion worth of fraud. You start totaling that up multiple times, and now you're talking about real money. 50 billion here, 50 billion there. All of a sudden, you're talking about real money.
Well, exactly. That's the statement, right? Billion here, billion there. What does it matter?
No, seriously. Now it's 50 billion thanks to inflation. But my point being is that for all of us, what the trick I think to skinning this cat, and this is what I've been arguing with Dave Collum in multiple conversations Dave and I have had, friendly arguments, but arguments nonetheless. We have to protect the current level of assets value so that we don't go through a nasty deflationary spiral where everybody's houses drop by 90% in value. So part of the reason why I think Bissett absolutely wants to do this cash for equity swap, not just because it's a home run for a variety of reasons, it's to protect and put a floor underneath the price of everybody's house at this point, along with, and then we accept all of this. And then we try and work off the incipient inflation that we all have been expected to come over the course of the next 20 years in order to deal with the nominal and notional value of the problem today. But if we freeze that and then just work that off and keep prices stable and actually do what the Fed's fucking supposed to do, which is stable prices and full employment, which are 2 mandates that the Fed can't, which are mutually exclusive, of course, from a monetary perspective. But if we do that, now we're staring at, okay, so we're talking about, 10 or 15 years worth of quote unquote, zero nominal growth. Yeah, but it's real growth on the other side, because what you're doing is you're taking probably 50% of GDP, which is fraud, waste, abuse, corruption, and hookers and blow, and turning it into manufacturing.
Right. We're going to unlock the piggy banks.
Yes. And China's going to be a partner in this, not an adversary. Russia's going to be a partner in this, not an adversary. It's Europe who is trying to keep the world at fucking war.
I have contended that there is a grand plan that's being worked together. Otherwise, you can't have it. Every time you have a situation like this where the economic engine changes in the world, you have a world war. Like World War I happened because it was the end of globalization 1.0. That was what happened. World War II happened because, World War I never really ended and put Germany in a really bad position. And this would be a world war. I mean, we're having little skirmishes, but you're right. So I think China and the U.S. and I think China's been a stabilizing force on Russia. My understanding is from all of our mutual friend, but I think Eric knows him better than most, said that in 2012, Russia approached China and said, let's just sell all of our treasuries now. And China was like, are you fucking nuts? Anyway, so over time, China has seen the light of the merits of partnering with Russia in this respect, but they haven't abandoned the relationship. They kind of liked Obama. You can't hold that against them. But anyway, the point is we need to all work together, and even if we are different. And U.S. Treasuries need to be supported by our own piggy bank right now.
And it means that there's going to be a vacuum. Nature abhors a vacuum. That's why the Chinese are pushing their government bonds into their regional economy, right? And getting people out from underneath their dollar obligations, which is fine, which we want. I've been saying for 3 years, like Powell wants this.
Right.
I mean, because it makes sense, because you've got to get the United States out from under Griffin's paradox. You've got to, you've got all these things. These are not unsolvable problems, but they are unsolvable problems if you have people who, are actively trying to gaslight you into believing that they aren't solvable.
Right.
And
we can fix it with 10 years of stagflation or 10 years of this. You know what I mean? I get it. I agree with you. It's funny that you bring up the whole China facilitating people to get out of their dollar debts. That's something that we all talked about, but Eric was like very on top of that back when we were talking about loans and what have you. Remember that, Eric? That was good.
Yep.
It's an enormous. I mean, it was a major signal by the Chinese that they're ready to help the United States deal with their dollar problem. I mean, I saw that as a dollar positive. I saw that in every way as an olive branch.
Right.
Have you heard? You guys heard that China's insurance companies are going to start buying gold as a part of their portfolio?
I hadn't heard that, but that makes perfect sense.
Yeah, Chinese government is mandating all these and insurance companies in China. They're huge. They are basically one of the biggest investors in China, institutional investors.
Sure.
And the Chinese government saying that they get in this pilot run, they allow them to buy up to 1% of their assets under management in gold and gold products. Right. And I think BOA, like Bank of America, did the simple calculations. Right. It is going to be around 300 metric tons of physical gold, per year,
gold
that they're going to be buying. That's only 0.8%, because that's taking they're not taking all 1%, because some of it is going to be leased, paper contracts, right? That's the kind of distribution between, the SGE has a pretty high physical delivery rate. It's almost 70%. Yes, it's almost 70%. Okay, so the BOA is taking that percentage, and then they're just saying, okay, it's going to be 300 metric tons per year. And then now, don't forget, I actually reminded Vince this. Don't forget, China also launched this new gold accumulate program, at their commercial banks for retail investors. Right. January 2025. That was told to us by Bai. Bai was actually the guy who told us, hey guys, this thing is launching, right? So I think once this LBMA hump, once this problem get resolved, and people actually start getting physical gold again, because I think right now China is also the delivery times are getting longer. Okay, let's put it that way for the physical gold, right? So once we get over this hump, I think that's going to be an additional 300 metric tons from the gold accumulate program. So that's 600 metric tons that are going to be online. Okay.
Yeah.
Starting 2025. Yeah.
And I firmly believe that we're going to see some form of similar thing here in the United States as well.
Well,
commercial banks,
no, I think the insurance companies are going to get themselves gold exposure. I just think it's inevitable.
They're going to have to, but before they do that, what's going on in China, Tom? I think you're old enough to remember this. China is liberalizing gold ownership, right, through individuals, right? But now they're telling their insurance companies it's okay. That's what Reagan did in the U.S. for stocks. 1981, 1982, they changed the tax code. And they liberalized ownership of equities. And so insurance companies, which are, as Eric notes, the biggest, if not the biggest, the second biggest purveyors of investments, whether it be an annuity, right? Let's think about Reagan. It's an annuity. and it's a variable annuity. It's tied to stocks. Well, that's an invention that came out of the Reagan era. So now you have the insurance companies in China, which the people are not completely embracing stocks yet, but they all understand gold. And now you're saying to a Chinese insurance company, you can offer gold as a product. Well, here's the gold variable annuity, and there's going to be massive demand for that. And that's what it did for stocks in the 80s. This concept of liberalizing ownership at the institutional level, it will do for gold in China, which will eventually, as Eric and I know, eventually will migrate to stocks. But before then, it will. Look, 600
Got to
tons.
travel. All of this has got to travel up Exeter's pyramid, Vince.
Right.
Yeah, like I mean, guys,
it's got to travel from the
right,
from the bottom to the top.
Sorry,
And that's
it's 600 tons right now. Sorry, I was just going to say 600 tons right now, but that percentage is going to go up. It's going to go up to 10% eventually. Think about that.
Annual production is only what, 3,500 tons? Like you're talking about?
Yeah, China is 350 metric tons.
I mean global production is somewhere around 3,500 tons.
Something like that. Yeah.
Here's a number from that Bank of America report, Eric, that you were talking about. Bank of America raised their target to 3,500, yada, yada, yada. And they said, based on their fiscal model, they said, for gold to go to $3,500 an ounce this year, at the end of the year, physical demand would have to increase by 10% in general, right? They're using a physical model. There's all other things that are involved in it. But then they went, now let's look at what China's doing. And they said, well, what China's doing comes in at 300 to 600 tons, whatever. And they go, well, that's 6% right there. Oh yeah. So it's basically the math for Bank of America is they were looking at percentage points of mine production, not existing ground. They're looking at new demand for new production. That's what they're looking at. And they said, if there's a 10% increase in new demand, which will be geared towards existing production, it will translate into a price of 3,500. And they're like, not very likely to happen, right? Okay, we agree. And then they went, well, let's look at what China's doing right now. And that's anywhere. They said initially it's 300, whatever is gazillion tons, right? And they said, well, when it's over, that will equate to 6 to 6.5% of the mining gold that we get per year, which puts us at $3,500. And that's the pilot program.
And they're not even. I think
that number is low as a percentage. I don't believe that we're producing over 5,000 tons of gold a year.
Right.
Well, and they're not even
because that's 6% of the 600 tons or 500 tons at 6%. That's a much higher. I can do the math right now. I'll pull up the calculator. That's applying an annual production of a lot higher than 3,500 tons.
No, but I think I have the report and I wrote it up. But basically, it's total physical demand, and they're saying that if the physical demand for gold were to increase by that amount, it would increase. If it were to go on plan, the gold demand from China would increase. Physical demand would increase from the insurance companies. Would increase takeoff by 6.5% of the free mined gold above hand. Let me find that right now while you guys are talking.
Yeah, but I'm trying to tell you.
I think BOFA is saying that the world produces 10,000 tons of gold a year, which I think is bullshit.
Right. Well, 882 tons, by the way, fact, not from me, from Ross Norman, who's notoriously neutral on gold. He's an advocate of the LBMA, and I don't say that with derision. He posted that 882 tons of gold went missing last year. So I'm like, if he's saying that shit, then who the hell knows what's going on?
Okay, then I'll amend and say, okay, maybe we're at 5,000 tons of gold in production because World Gold Council is talking like 3,500 to 4,000 maximum.
There you go. Let me.
So Vince. Yeah. Anyway, I was just going to say that you said that the Chinese insurance companies buying physical gold alone is going to jack it up to 6% additional demand of physical gold worldwide, right?
Right.
But remember what I said, the gold accumulated program, that's another 6%. That's your other 6%. It's 12% right there.
Wait, say that again. Say that again.
I'm saying the gold accumulating program is going to add another 6%.
Oh yeah,
on
exactly.
top of the 6%. That's 12% right there, and that's
Right,
not
right.
even like you're not even like the like who's BOA, right? Bank of America.
Right.
They're not
Right.
even like adding the US demand. Like we're doing the show right now. The people on X are saying the US is sucking up the most amounts of gold right
Right.
now. Okay,
Because
so if you add, it's crazy. I think actually this year, this is my prediction. There's a possibility we'll push 4,000 US dollars
Oh, easy.
in this year.
I think we'll see 4,000 this year.
Yeah.
yeah,
So there you go.
yeah, they all are keeping their numbers low. You know, Eric, I wanna just rephrase what you said, not to change it.
Yeah.
I don't think people are familiar with the
Gold
history,
accumulate program.
the
Yeah.
immediate history. China liberalized gold ownership amongst its people, allowing them to connect bullion accounts to checking accounts. You can't do that in the U.S., right?
Yep.
Now, to your point, Eric, China is now saying to its citizens, and now you can actually take delivery of the gold, and that's just
You know that's huge, right? Because before people were buying gold, like in the form of jewelry, mostly,
right.
right? Like like your bracelet, your ring, whatever, right?
Right.
Guess how much. Yeah,
They viewed it as
guess how
safer.
much China, like like from the SGE, right? Guess how much China withdraw gold just from that alone, from mainly jewelry and some bullion, right?
Right.
1,450 tons per year. Okay,
Yeah.
2023 and 2024, just from that. So
that's
I'm
an
being
insane number.
conservative. It is insane. I'm being conservative. I'm saying, like another 300 for the. It can easily be 600.
Well, I think the banks have to be
From the gold.
concerned.
The long and short of
Yeah.
all of this, regardless of the numbers themselves, is that everybody wants a higher gold price.
Yes.
And I think that's where we end it there, and just leave it hanging. That there is no one out there anymore other than the LBMA, other than the old kings of Europe that want a lower gold price. But even the ECB wants a higher gold price because the ECB has to mark its gold to market in order to deal with its bloated interest rate sensitive balance sheet.
Yes.
We haven't even talked about that. 85% of the ECB's balance sheet is interest rate sensitive in terms of valuation. 85%. Right. So, with that said, folks, you guys have been fucking phenomenal, but this thing is going on way longer than I like to normally go. So why don't we table this discussion for another time? We'll get back together in a couple months and we'll talk about whatever, the latest episode of the season 2 of the Trunk Show looks like. But this has been fantastic. I really do appreciate you guys taking, bringing, all of it to the table today. So Eric, Vince, final words on the way out the door, and then we'll close it out and we'll get on with our lives.
I think I'm just gonna say one thing. I think we are living in a new world. So like, stop thinking, the old milkshake thing. Like that ain't gonna work. That's not how this new world is gonna function. Like that old milkshake thing is over. It's a new milkshake. It's gold and silver milkshake. Okay. US is sucking in the gold and silver, right? That's it. That's my final word. Yeah.
Let me draft on that.
Yeah.
The dollar doesn't have to go down for gold and silver to go up. That's the old way of looking at things. And anyone who's still pushing that is really just unpatriotic, actually, when you think about it. So I agree.
Nice. Thank you, guys. That's a great way to end. Perfect. You guys take care. You be well. We'll talk again soon. And of course, all of us will be on Twitter at Sorenthek, Vince at King Kong 9888, Eric, and of course me, TFL 1728. Where the worst versions of us will show up every day. You guys take care. You be well. We'll talk soon. Keep your stick on the ice.